Hey everyone, thanks so much for watching this video. If you found yourself here, it's likely because you are a real estate agent or a realtor and you're wondering about the tax implications of being a real estate professional. My name is Nabi Miraj, I'm a CPA, and the purpose of this video is to educate you and give you some information that I think you will find very valuable. So before we jump into it, let me just minimize myself. I'll put myself down here. And let's go over the topics that we're going to cover. Again, so how does the IRS view you as a real estate agent or realtor? Here's a hint. You are a self-employed business owner now. What happens if you do nothing? Meaning, what happens if you operate as a sole proprietor? What happens if you create a professional limited liability company or a PLLC? Why a professional association may not be right for you. I'm sure a lot of you have colleagues in your office or will have colleagues in your office that have formed a PA, and it's probably not the right entity type for you. What happens when you elect to have your PLLC or PA treated as an S corporation for tax purposes? How much money can I save by implementing these strategies? That's a very exciting portion of this presentation. And how can you start implementing some of the strategies that I'm discussing here today? So again, my name is Navi Miraj. I'm a CPA. I've worked in the banking and accounting industries for over 13 years now, and I've worked for companies such as Wells Fargo, JP Morgan Chase, Deloitte & Touche, and I'm also the president of a company called FileYourBusiness.com, where I do exactly what I'm doing with you now, is educating you on different legal entity structures and the tax implications of one versus the other. And so before I move on, I just want to say that, I mentioned I was in banking, and in my days as a banker, often I was doing the same job that you are doing right now, marrying a buyer and a seller of commercial real estate. And so I very much understand and value your time. And I also know that there's a stick of dynamite waiting for you at every step in the process, right? We're talking about the appraisal, the inspection, the title company, the homeowners association, the homeowners insurance. I get it. These are all obstacles. So I can relate to the stuff that you go through. So how many of you remember this, right? The day you became a real estate agent, you probably were very delighted finding out that you passed your exam after studying for it for many, many hours. But let me ask you this. How many of you know that you are a self-employed business owner now? And so quite a few of you watching this video have not realized that yet. And how I know that is because I've done presentations in front of realtors before, and I know that people aren't talking about this subject matter. And what I mean by this is, I don't mean, you're the one-man shop, and so you are not only the realtor, but the marketing department, you're the sales department, you're the photographer, you're all these different things. What I mean is the IRS views you as a self-employed business owner. You are not an employee working for another company, right? You will receive a 1099 at the end of the year, and if you do nothing, the IRS will call you a sole proprietor. So what does that mean? What is a sole proprietor? A sole proprietor is basically, when you operate this way, you and your small business are legally the same entity. John, the real estate agent, and John, the husband and father, are the same person. So what does that mean? That means if a client decides to sue you because they claim you misrepresented a property or didn't disclose something to them, they could potentially sue you, and your personal assets, such as your personal bank account or vehicles, may be at risk. So you have no liability protection. From a tax standpoint, what does it mean to be a sole proprietor? That means that you will continue to fill out an individual tax return. That form is called a 1040, and you will attach a schedule called a Schedule C to that individual tax return, okay? You're not filing another set of tax documents. It's a schedule that you attach to your existing individual return. Now, your net income, meaning when you've earned all your commissions and you've deducted your expenses such as marketing and sale and photography fees and such, your net income is subject to 15.3% in self-employment tax. For the purpose of this discussion, we're mainly going to be focusing on self-employment tax because you will also pay federal income tax, but you'll pay that regardless of what entity type you are, right? And just a quick disclaimer, the content of this presentation is not intended to be specialized and individualized legal and tax advice for you. I'm not an attorney, so I'm not giving you any legal advice, and this is not tax advice for you specifically. You and I should have a phone call, or you and your tax professional should have a phone call after you learn what you have from this video. So, what should you do? You should probably form a PLLC, a professional limited liability company. And so many of you are wondering, what is this? I've never heard of this before. Well, let me explain it this way. You probably know what an LLC is. You've heard of limited liability company, and you probably know what a corporation are. You've heard of that, right? And so a professional limited liability company is formed when you have a business license and you're performing a public service. So very much like you don't necessarily see your fellow realtors forming a corporation, you see that they formed a professional association, a PA. Well, a PLLC is sort of like the PA of corporations. I probably just confused you, but basically you're going to form a professional limited liability company because you have a real estate license and you're performing a public service, right? So what happens when you create one? What happens is now you and your small business are two separate legal entities, right? So John, the realtor, is now separated from John, the husband and father. Right? So if someone says that you misrepresented a property and they want to sue you, it will be more difficult for them to come after your personal assets. What changed from a tax perspective? If you look at the right-hand side of this, from a tax perspective, nothing changed. If you are a single member professional limited liability company, which most of you are going to be, right? You're a one-man shop or one-woman shop, PLLC, then from a tax perspective, nothing changes, right? If you look at this slide and then you look at this slide, nothing changed. You're still going to attach a Schedule C to your individual tax return, and you're still going to subject yourself to 15.3% of self-employment tax, all right? The only thing that really changed is that you now have limited liability protection. So let's talk about this for a moment, the PLLC versus PA. You're probably like, hey, this guy doesn't know what he's talking about. Everyone in my office who's formed a legal entity has a PA. Well, I'm here to tell you that that's an old school method of thinking, and it's likely happened because someone was trying to emulate the behavior of a top producer in their office, and that top producer, when they started out, was emulating someone else who was a top producer and they had a PA. But a PA, like I said a moment ago, is a corporation. And so by default, the PA account is subject to double taxation, meaning when you earn your commissions and you deduct your expenses, the money that's left over is going to be taxed as your corporation. And then when you, the individual, the owner of the corporation goes to extract money from it, you're going to get taxed again in the form of a dividend, right? We want to avoid that. You would want to be a PLLC. Because with a PLLC, as I mentioned a moment ago, the default tax classification is to be treated as a sole proprietor. And then when it makes financial sense, you'll make what's called an S-Corp election, which we'll talk about in a moment, and save money on taxes then. It doesn't always make sense to make an S-Corp election, especially when you're first starting out. If you're first starting out and you're making probably less than $30,000 for the year, you want to form a PLLC and not a PA because you'll pay more in taxes as a PA. Now, some legal notes. Again, I mentioned I'm not a business attorney, but just general things to keep in mind. You should probably have business insurance and not rely solely on your business entity to protect you in case a legal matter arises. And you also want to maintain your legal entity appropriately, or what they call piercing the corporate veil could occur. So what I mean by this is you need to maintain a separate bank account for your real estate business than that of your personal business, right? You want to have an operating agreement. You want to make sure you're using all your legal entity names. So you'll put, John Doe PLLC on your business card instead of John Doe, right? And we can talk more about this one-on-one. S Corporation. Here's probably why all of you guys were tuning in, because this is a very strong tax saving strategy, right? So what is an S corporation? It is a special IRS tax election that you can elect to make money, to save you money rather, on self-employment taxes. And so PLLCs, LLCs, C corporations, professional associations, they can all make this S corp election if they qualify. And so, what does this mean? How much money is this going to save? Let's look at this via a case study. So let's look at the fact pattern here. John received a 1099 at the end of the year indicating he earned $100,000. He had tax-deductible expenses of mileage reimbursement, cell phone, home office, photography fees of $20,000, which resulted in a net income of $80,000. How much does John owe in self-employment taxes as a sole proprietor versus an S corporation? Well, let's pull it up. As a sole proprietor, he hustled, sold a few properties, earned $100,000, had expenses of $20,000, and was left with net income of $80,000. That $80,000 is subject to 15.3% in self-employment taxes, meaning John's going to fork over $12,000 in self-employment tax. Now, what if John watched this video and consulted with his tax advisor or worked with me, and what would happen then? So at that point, let's look at the numbers. Obviously, John didn't sell any more properties, and he incurred some of the same tax-deductible expenses than when he was a sole proprietor, and he was left with $80,000 in net income. But here's where the magic happens. That $80,000 can now be split into two separate buckets. One bucket is going to be your salary, and one bucket is going to be called your draw or K1 or distribution. Those are all synonymous terms. And what occurs here is the amount that you take as a quote-unquote reasonable salary is still subject to the self-employment tax of 15.3%. So in this example, he paid $4,896 in self-employment tax, but the draw portion of the money is not subject to self-employment tax. And so in this example, John saved over $7,000 in self-employment tax. So let me pause there and say, some of you are watching this right now and saying, I'm not a $100,000 producer. This doesn't make sense for me. Well, I'm here to tell you that, number one, if you're making more money than that, then there's even more tax savings that you will see from this strategy. But if you're making less net income than $80,000, then that's okay. Typically, this strategy makes sense when you start coming up on about $30,000 of net income or so. But again, this is not tax advice for you individually. You and I, or you and your tax professional, need to have a conversation. So how do you start implementing these strategies, or how can you start having that conversation with someone? Well, if you'd like my assistance, here's my contact information. It's navi@FileYourBusiness.com. You can call me locally, or you can call our toll-free number and ask for me, or you can navigate to FileYourBusiness.com and start the process. Actually, let me just show you that for a quick moment. So you can go on our site and visit our homepage and see the different things that we talk about here. I mentioned educating entrepreneurs about the business, legal, and tax implications. You can learn how it works and why business owners choose us. But if you navigate to the top and click Start Filing, once this page loads up, you'll be able to select the legal entity that's appropriate for you. So you'd be able to click, in this example, if you've been listening to what I've been telling you, you'll click Start Filing under PLLC. And you'll just simply answer the questions. We've used easy questions here to guide you through this process. Another cool thing is, you see this chat down here. We can chat with you live, but even better than that is, from the convenience of your own home, you can navigate this site on your mobile device or a tablet or PC or Mac, and you can share your screen with me, and I can help navigate you through this process and you can ask your questions as they come up. Now, the purpose of this video was not to be a sales pitch or anything like that. I just wanted you to learn about the tax strategies that you should be using as a real estate professional. As a matter of fact, I would encourage you, probably with the exception of our site, because I know about these little inner workings and these little nuances, but I would discourage you from going onto another site and filing the paperwork, or even going to your state's Division of Corporations and filing the paperwork on your own. Why is that? And this is me being very sincere when I say this. You will likely make a mistake. I mentioned that I was in banking for over 10 years, and so when I was a banker establishing business accounts for entrepreneurs, I found that a large part of the time they made mistakes filling out the documents, such as they might call themselves a president when a president is not an appropriate title for a PLLC, and so the bank will tell them, hey, sorry, I can't open this for you, or you need to amend this document, costing them more time and money. Even if they went through some of those very large million-dollar corporations and started filing their paperwork online. It's because that's more of a general service. It's not catered to real estate agents and realtors. So whether you use me or use someone else, make sure they know about these things. And now I've armed you with the information. If they hesitate on asking some of these, on answering your questions, chances are they're probably not the right person for you. So again, I thank you for your time. I appreciate you listening to this presentation. In summary, form a legal entity to create some limited liability protection. And that's not the sole reason why you're doing that. Remember, you're doing that so that when it makes financial sense for you, you can make that S-Corp election and save money on self-employment tax. If you continue to operate as a sole proprietor and you've gotten to the $60,000 or $80,000 mark or $30,000+ mark in net income, I cannot help you, or your tax advisor cannot help you. You need to form the entity so we can make that S-Corp election, and then we can help you with that self-employment tax saving strategy. So thank you again so much for your time. I hope you receive some value out of this, and please share it with someone who's a fellow realtor or real estate agent. I'm sure they would learn something from this presentation. Thanks again.